All right, so although they've staged really strong rebounds from that July swoon, the Magnificent Seven still not as dominant as they were last year. I mean, take a look at this, right? NVIDIA was number 1, Meta number 2, Tesla number 10, and Amazon number 20 among the S&P 500. But, well, that could go into overdrive, folks. Remember, NVIDIA, they post their quarterly results next week. Also remember, though, Wall Street had some pretty harsh reactions to those so-called hyperscalers. And even though I got to tell you, I thought those earnings reports were really strong. I want to bring in now Guggenheim Securities Senior Managing Director and Software Equity Analyst, John DiFucci. John, so listen, the AI revolution goes on. Whether Wall Street's happy or not next week with NVIDIA's results, we know AI's here. It's here to stay. We saw some amazing comments from Walmart on the work AI did. They were able to achieve things with AI that they would have needed, like, you know, a whole entire new workforce to do. With that in mind, I want to talk about this report you published because the headline alone is pretty intriguing. AI universally disruptive, but not universally destructive or monetizable. Let's start with that, the destructive part. And this is mostly coming from the angle of software companies.
That's right.
Where is it destructive?
Well, it can be destructive, and if AI takes over an area of software and you don't really need that area of software, or you don't need as many seats.
Are there areas now that look more vulnerable than others?
You know, there's some, it's interesting. In the software space, Wall Street wants to have a column of winners and a column of losers.
Yes,
but it's amazing. It's like, you know, the winners one week may be in the loser column the next week and back and forth. Adobe's a big stock like that moves back and forth. The CCaaS, the contact center as a service section, was in the loser column for a long, long time, but now people are realizing, well, if they're going to provide AI technology, maybe they don't need as many agents, and it's usually seat-based. But what if the pricing changes and it's more transaction-based? So maybe they're going to be a beneficiary.
And it's still kind of early to know for a fact.
It's still too early.
What about the monetization part, though?
Well, that's the thing that's really interesting too. So, Charles, you hear, like, you see people, like, they're like CEOs. Some CEOs are out there, and I don't blame them, because I really believe AI is going to change the world, and they believe it's going to change the world. They're going to help that happen. That doesn't mean they're going to monetize it. There's a lot of companies out there, companies like Oracle and Workday, that just say, hey, yeah, we're going to infuse AI into our technology. We have been doing that for years, and we're making our products better that way. And oh, by the way, we get an uplift in price along the way. It's not AI uplift. It's just what we always got based on the cost of living, whatever, you know, inflation. Then there's other companies that are out there saying, you know, there's a couple out there, ServiceNow or Salesforce, that's going to report next week, and they say, listen, we are going to monetize AI. It's going to be this incremental thing for us, and we're going to just create all this new revenue, and that just, it just.
But you seem skeptical.
I certainly am skeptical.
You have a neutral on Salesforce right now. Salesforce is intriguing. It's been a juggernaut. Mark Benioff, Wall Street loves Mark Benioff.
Yep.
But there's been some questions over the last year, and I'm surprised the weakness that it's exhibited. I also went through your list, your coverage list, and it feels like most of the cybersecurity names you have a neutral on. Like the one, Palo Alto, I think, which was the #1 percentage gainer yesterday or the day before.
Yep.
CrowdStrike, which of course had that disaster, but it's come back strong. You do like CyberArk and Sentinel, right?
Sentinel-1, yep.
Sentinel-1. What is it about cybersecurity, though, that you just don't have a blanket buy on all of them?
Yeah, well, that's something, throughout my career, I've never had a blanket buy on everything.
Is it based on share growth?
Well, it's based on security had done well for a while. And by the way, we had a buy on CrowdStrike. It was the most expensive stock we covered based on a multiple. But immediately after that happened, we were like, God, there's so much uncertainty here. We just have to step aside for a while. So now we're neutral on it. And it is a great company. It's a fantastic company. Palo's a great company too, but there's a lot of questions. If you really look at the numbers, I saw one of your earlier guests talking about looking at the numbers relative. By the way, if you beat numbers, the expectations that you helped set, well, that's good. Yeah, that's great. But if you really look deep into the numbers and see what's happening to growth and new business and how that might be trailing off, that's got to raise questions for you. And it's hard to get behind a stock like that. By the way, there's two other security names that you didn't mention that we do have buys on. One of them's Okta. It's an identity company. And the other one is Rubrik, which a lot of people are like, well, it's not really security. It is security, okay? It's also storage. and backup, and it's like next generation backup, but it's also a security play.
And now, before we go, let the audience know that Oracle is the name that you're kind of pounding the table on right now.
Oracle's the one that if you add up all the hype stuff, even though I don't think they like hype it themselves too much, Oracle's going to be a beneficiary of AI in a big way. Right. They are a hyperscaler. And by the way, if you believe, like I believe, that Oracle can provide better performance at a lower cost for cloud-based services, they might, it costs a lot of money and it takes a lot of resources to run AI workloads. They might benefit more than anyone, or at least as much.
All right, you heard it here first, because that's the first time I've heard that one. Good stuff, John. Really appreciate it.